Happy Tuesday, everybody. Gina here with your weekly market update. I hope that everybody had a wonderful and maybe even peaceful Thanksgiving with your families. We certainly wanted to take a moment to extend our gratitude to all of you for trusting us as your advisors. We know that trust has been more important than ever before in recent years. When you look back on the decisions that you've entrusted us to make over the past few years, certainly we are never going to time it perfectly, but we have been pretty spot on with a lot of the predictions that we have made. And that's not to say that it's been easy being patient or for some of you hands off and letting us do what we do best. But we are all very grateful to Cynthia for her wisdom and expert decision making that has really helped guide the success of our portfolios throughout this volatile market. With that being said, for where we're at now, again, we sort of predicted that we would be in a more healthy and normal market territory, which we believe that we are, and that this rally we've seen so far this year is sustainable, and are cautiously optimistic that that will continue. That's not to say that a war in the Middle East is going to cause the market to react. Of course, that's the case. And as we saw last month, the market's going to react to that, but it was supportive of that volatility. And there's certain thresholds that we want to make sure the market supports. Even when there is major volatility. And that's what we saw. And that's why we did not make any major strategic moves out of the market to get defensive last month when we saw that downturn. And that proved to be right. As is often the case, it's usually about time in the market, not timing the market. That's not always the case. And as you've seen us make moves in the past few years to get defensive, we don't feel that you need to go down with the ship. But last month was not one of those scenarios. As I said, that volatility was supportive of a healthy market. And that was proven to be correct in the sense that October 31st, the S&P closed at 41.93. Fast forward a month later, here we are, almost the end of November. S&P's back up to 45.50, so almost 8% in 1 month. And that's why it's critically important to the success of a portfolio that you don't miss out on those best handful of days or weeks in a market cycle. And again, why you entrust us to make those decisions for you. So we feel that the market's back in that stable, healthy territory. We hope that this continues. Obviously, we'll have to see what's in store for the last month of the year, but until then, sit tight, know that you're in good hands. And if anything changes, of course, we'll let you know. And we'll talk to you again next week.